Hey, so everyone, is China pounding the table for a new reserve currency, or isn't it? And what should we expect when President Obama meets China's Hu Jintao at next week's G8 meeting in Italy? Our next guest has been pounding the table himself, warning that the dollar is on the verge of a crisis and could lose credibility worldwide. Keith McCullough is founder and CEO of Research Edge, which provides independent market research to institutional clients. He's also a former portfolio manager at the Carlyle Group's Blue Wave hedge fund. So, Keith, on the one hand, we heard that China wanted to introduce the dollar debate at the G8 meeting next week. And then, of course, we have a Chinese official saying, no, that's not what we want. What's really going on here?
I think you always have to watch what the Chinese do, not what they say. I mean, this is a critical situation that we have here that is very much, you can monitor it on a day-to-day basis. On Monday, China struck a deal with Hong Kong to effectively allow international trade settlement in Chinese yuan. That's what they're doing. What they're saying relative to their largest position is much different. If you had your largest position, the last thing you would do is signal what you're going to do with it real time.
Okay, but the key here, though, is whether or not this is a long-term debate, and even the Chinese and pretty much everybody else acknowledges that they're not going to get rid of the dollar as the world's reserve currency overnight.
No.
The question is, how do you invest accordingly? Do you believe that China is selling treasuries? Because the data suggests that they're still accumulating them.
Well, actually, the data earlier this week on Tuesday, we got the Treasury data, and they actually showed up as a net seller. $4.4 billion. It's not a lot of dollars. $1 billion isn't what it used to be, but a dollar isn't what it used to be either.
But one report does not a trend make either.
No, but my assertion here is that China is selling, and right now they're telling you that they're not selling suddenly. Like, you wouldn't behave like a crackberry addict with your largest position. What I think they're doing is that they're selling gradually, and that started in April. That's a fact. That's new. And it's just, I think the writing's on the wall. I don't think that this should be a surprise to anybody.
Okay, but if it's going to be a long-term development, how do you anticipate markets will react, and how do you position yourself accordingly?
I mean, what we've been in right now is this massive reflation trade. So dollar down equals everything else up. You pay the debtors, you pay the bankers, you pay the politicians. That's accommodative for the U.S. stock market in the short term. In the long term, inflation comes into the game. So I think that reflation comes into the fourth quarter, not the third. People are ringing and ringing about a dollar-based, inflation situation right here and now. I think timing's critical. I think it comes into the data in the fourth quarter, and that's when it becomes a very big political football for both the Fed and the Obama administration.
The past 2 days I spent in Aspen, Colorado at this thing called the Ideas Festival, where I did have a chance to talk to some former and current administration officials and even some people on the other side in the Republican camp who say that no matter what happens, inflation is the way to go because we can't afford to take out the monetary stimulus too early. Do you agree with that assessment? And again, if that's the case, if it's all about inflation and reflation, what do you need to do to either A, profit from it, or B, hedge against the risks?
Yes, and again, duration's critical. That had been our call on being bullish the last 6 to 9 months. But now as we traverse reflation into inflation, I think you start to walk the high wire of a lot of unintended consequences. Price of oil empowers Putin. What you're seeing this morning, North Korea firing 2 missiles. Iran, obviously, is all over the news. The price of oil is based in dollars. There are a lot of unintended consequences. The consumer spending can get choked off by inflation. So you have to be very, very careful. And the way that we've played it really is being long the Chinese yuan right now, being long tips, and being long gold. Those are the very straightforward kind of ways to play it. But we're starting to get into stuff like cattle prices, which is obviously, one thing that you actually need to do is buy, beef over time. Prices are very low, and when you adjust for everything else that's happened in the commodities complex, cattle looks very attractive.
Of all the commodities out there, do you think cattle is the best bet right now?
Yeah, on a relative basis, relative to the move. We used to be bullish on oil, and we've been bullish on gold since 2005. But right here and now, cattle's actually the most interesting.
Wow, that is fascinating. You heard it here first, folks. Keith McCullough says of all the commodities out there, cattle is the way to go. Keith, always good to have you. Keith, CEO and founder of Research Edge.